Okay. You started yet? Okay. Happy holidays! Love the payment before you love the house. What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. I am your host, Minh. I've been in the mortgage industry since 2003. Hopefully, you're having a great night. Tonight is our Wednesday Q&A night. If you're thinking about homeownership and you want to have answers to your questions, tonight's the night to ask. But how we normally start our Q&A, we answer the most popular question people asked the week before. And everybody's asking me, what are the new conventional loan limits? And how are these new loan limits gonna affect real estate in 2021? Tonight, we're gonna answer that. If you're first time tuning into our channel, do me a favor, hit the notification or subscribe button so you're notified every time we go live or post new content. We go live Mondays and Wednesdays. Mondays is everything related to mortgage. Wednesday is Q&A night. And we play our videos Sunday mornings and Wednesday mornings on YouTube. So definitely check us out. Also, if you're not following us on Instagram, definitely check out my Instagram. Every morning I do a word of encouragement or I leave a tip. So definitely check out our Instagram. All right, guys? So hopefully you're having a great night and let's get into it. So tonight we are going to go over the conventional loan limit changes, okay? We're going to go over only conventional, not FHA. They don't happen or they don't take into effect until 2021, but a lot of lenders are already allowing you to use the new loan limits to qualify, allowing you to use the new loan limits to go out and search for homes. But as long as you close escrow in 2021, January 1st, you will be okay. All right. So that's why everyone's talking about it. But how's it going to affect us in 2021? And we're going to go over that today. So conventional loan limits, right? For those of you who are like, hey, you're waiting for that big day, because a lot of us, we can't put 20% down, right? And we're going to go over how this is going to help people qualify for more home in 2021. Okay, let's get into it, right? The 2021 loan limits, all right? Here are conventional. Yes, the FHA loan limits are out, but they're not giving you exact numbers. Right now, all they're doing is they're giving us a percentage. But as soon as FHA finalizes their loan number, we will go over FHA. But conventional, typically, pound for pound, will have higher loan limits than FHA. Okay, like I said, conventional loan limits will be higher. So we're going to go over that. For those of you who are teetering, well, man, I'm going to wait because I can't put 10% down, or even on jumbo right now, anything above the loan limits, because of COVID, the 10% down went away. If you're buying something past the loan limits, you would have to go jumbo at 20% down. But this is going to give people more hope. All right, let's get into it here. So in 2020, you're looking at Los Angeles and Orange County. The high balance was 765. Now it's 822. Right? That gave a $56,000 increase. That's the highest increase out of all the counties, right? If you look at the high balance for Los Angeles and Orange County, 765 to 822, that's $56,000 difference. The regular non-high balance for LA and Orange County is 510,400, and the new one is 548, 250, okay? About 38 grand. And the big one, San Bernardino and Riverside County. You went from 510 to 548. That's really big for San Bernardino and Riverside because a lot of people couldn't buy homes because there was nothing in their loan limits that would help them qualify. So a lot of people in Riverside and San Bernardino would have to qualify on going jumbo. San Diego saw a $51,000 increase. Right? The regular regular non-high balance, same as everybody else. Look at Ventura County. So it tells you, right? Ventura County only jumped 27,000, which tells you homes on the higher end of Ventura really didn't climb so much. That's why it's at 26,000 compared to looking at LA, Orange County, or San Diego. They saw a higher increase. That's why you see there's a much higher gap. And Kern County. right? If you want to know the loan limits and your county's not on here, definitely you can Google it online. Today I'm going over the main counties that we're in at What's a Mortgage. So when people reach out to me, what we do is we do a census of where people are reaching out from. And of course, where they're reaching out from, we're doing the counting. So if your county's not up there, no disrespect. If you want to know the numbers, just message us and we will send you the county loan limit. Okay. So that's out with right there. You can see that who's doing what. Okay. That right there really shows you what county is growing at what speed, right? You can see overall the difference between regular loan limits, right? Change about $40,000. It tells you where inflation is growing. And I tell you guys all the time, don't focus on purchase price. Don't focus on interest rate. Focus on the payment. As you can see, they're increasing loan limits because monthly payments are increasing. That tells you no matter what prices are going to go do next year, they're already projecting loan limits to be higher, right? So if they're projecting loan limits to be higher, what is it projecting? Payments will be higher, all right? So definitely you want to take that into consideration, especially now. If you're buying in Orange County, LA, you can see how fast inflation is moving, San Diego compared to the other counties, right? So you can see more on the higher end. So typically what you can see is on the normal end, the 510, everyone seems, going at a rapid rate about 40,000, right? Except for Ventura County's high balance. But if you're looking for LA, Orange County, or San Diego on the higher end, there's a $50,000 jump, right? LA was 56,000, and LA and Orange County 56,000, and San Diego was 51,000. What does that tell you about the high-end areas in those areas? They're continually growing. So you can tell a lot with these loan limits by how much it's increasing, right? If you didn't see a huge increase, it tells you it's barely growing in those areas in that specific dollar amount. But as you can see overall as a nation, right, $40,000 increase, right? Not as a nation, as California. So you can see if you weren't able to buy, you're just spending a little bit more now, right? For next year. As you can see, the limits are increasing. Well, how's it going to affect you buying? Let's go over that in just a second right here, right? How is it going to affect you? Let's look at the people who are buying 3% down. Everyone who's buying 3% down, all right? Let's look at 3% down. 3% down, okay? If you're looking at the regular loan limits, right? So, of course, as long as you don't go into high balance, you can come in with 3% down. By the way, if you're not a first-time home buyer, right? If you're a first-time home buyer, you can buy with 3% down. Even if you're above the medium income, right? They came out with a program that allows you to still buy with 3% down. So if you've never been a homeowner before and you're going conventional, you can go 3% down. If you have above a 720, 740, conventional 3% down will beat FHA on payment, all right? So definitely consider that. If you look at here, before in 2020, the max you can go is 525, right? 525 per purchase price, 3% down, close to 510. I try to get as close to 510 as possible. So think about if you were in San Bernardino, Riverside County, 510, you missed out on a lot, right? Because a lot of homes were above 525. So you weren't able to buy a lot of homes. But now, right, it's coming in at 565. Most of the homes everyone was looking for was at about 550 or higher. Now that just opened up more buying opportunity for people who were not buying, because if the loan limit was 525, they'd have to come in with the difference, right? So at most you can go up was 525. If you went above 525, you'd have to come in with the difference as well of the 3% down. That is changing everything for Riverside and San Bernardino County, which is going to give more people more buying power. Now that they can go to 548, they can go to 565 purchase price. Even if they have to come in with a little bit more, because most homes, I think, are going to be around 575, right? 575, think about it. You only have to come in with $10,000, and then you're 3% down, which is going to give people who want to live in San Bernardino, Riverside more buying power, right? Because of COVID, 10% down jumbo went away. So if you were above the 510, you would have to put 20% down, right? But with before COVID, it was 10% down. But then now with COVID, it's 20, which took a lot of people out of the market to buy in San Bernardino, Riverside. But now with this new conventional loan limits, it's opening up doors for more people to buy in Riverside and San Bernardino County with 3% down. It's just creating more opportunity, which should drive up prices, right? And create more demand. Look at San Diego, Ventura, Kern. You can see before homes that were 525, now they go, and people who only had the 3% down can go to 565, right? A lot of people, it's not the down payment. I mean, a lot of people, it's not the monthly payment, right? It's the down payment. Come in with a saving for that bigger down payment on top. If you're paying rent and you're trying to save a bigger down payment, it makes it hard. Now you can get it with 3% down on 565 instead of 3% down on 525. A lot of people, their breaking point to see the home of their dreams was 550 or higher. Guess what? These doors just open wide. Now you're going to have more people who sat on the fence, who wanted homes in the 550, 565. But now there's opportunity. Now there's a chance for them to have a piece of the American dream. So that's what happened with these new loan amounts. They're creating more options and opportunity, okay, on 3% down. Look at on 5% now. Look at that for just a second here, okay? Look at this 5% down. Woo! You went from 805 to 865. Like I said, for most people, it was not the monthly payment. Because if you're paying rent and you're trying to save for a down payment, it's kind of like you're already making your mortgage payment. So the payment wasn't the problem. It's saving that bigger down payment because the loan limits were lower, right? Let's check this out again. Look at this. 2020, 805. Now you can go to 565, right? 537, 577 now, right? If you went 5% down, right? If you look at, I look at mostly Orange County, LA County, San Bernardino, and not San Bernardino, sorry, San Diego and Ventura County. Those are going to create more opportunity for high balance people to buy with 5% down. It's a big deal. When you start going into higher loan amounts, because of COVID, you couldn't do 10% down anymore. You'd have to do 20% down. Now with loan limits increasing, you don't have to put that 20% down. Now you can go back to 5% down and keep your cash. I think it's going to cause Orange County, LA, San Diego, and Ventura to explode. It's going to create more opportunity, which is going to drive up prices. That's why I feel 2021, I don't think prices are going to sag like everyone thinks it's going to sag. Yes, unemployment is spiking up just a little bit, but remember, most people who are unemployed were not homeowners. Most people who exited California were not homeowners. Okay? The people who own homes, if they refinance, they had to have a current job. And right now, if they refied, they have more equity, right? They have more equity, then why would they want to go back and rent? Okay? So think about that. So forbearance is going up. It just ticked up just a bit, right? But remember, if forbearance just went up, that means in December or November, they asked for forbearance. They have 1 full year. Look at me. If you had a full year because you got unemployed to live in your house without making a mortgage payment, without being late, without paying additional interest, right? You have till November. Wouldn't you go out and spend that time finding a job? So I feel like all these people who are asking for forbearance will have work again by the time their forbearance is up. It's not like they got to pay back that forbearance right away. Remember, it's a second mortgage behind the initial mortgage. You can pay it off when you sell your house or when you can pay it off with your own money if you want. So I see that with all these unemployment forbearance, I feel like it's not going to affect the market. With the shift I can see in the high balance, it tells you upper middle class probably have their jobs. It's probably not going to go anywhere. That's why they're making it more appeasing for them to buy too. Banks aren't stupid. They know it's not the monthly payment, it's the down payment. They just made it easier to keep driving up demand. People buying, they make these loan amounts bigger, so they're expecting people who can afford more, who are currently working or have jobs to buy. All right, so I feel 2021 with these loan limits, it tells me I don't see a downside in the crash of the market everyone's saying. I'm saying opposite of what a majority of people on the internet are saying, and the reason why I can tell by the loan limits. If they feel like the market was capping out, they wouldn't increase the loan limit exponentially. Okay, that's number one. They wouldn't worry about increasing it. Well, they increase loan limits every year. No, they don't. 4 to 5 years ago, loan limits did not increase. They barely increase. In the last 5 years, they keep increasing because demand keeps going up and driving up prices. And if they didn't create opportunity by raising loan limits, people couldn't buy. And they did this because 10% down, jumbo went away. So people would have to come in with 20% down. So that's the reason, right? They increased the loan limits. They're creating more buying power. It's not the monthly payment, okay? It's saving for the big down payment because you're paying rent and you're trying to save money. The banks figured out you can't save fast enough. Inflation is moving too fast. So what do? They increase loan limits for you to qualify for home ownership with out of pocket less. Well, man, people are going to go broke or their country's going to go bankrupt if everyone comes in with a low down payment. No, they're not. We've done the math. The person who buys 5% down now will have more net worth than someone who waits 4 to 5 years to buy 20% down. Trust me, I've been trolling the people who've been trying to troll me on bigger down payments. I'm telling them, bust a move, bring it on, right? There's one person, right? They said they would challenge me, but I haven't heard from them since. And I'm like, well, let's run it with a 3.5% inflation and see what happens. There's no way I'm losing. Where'd you get those numbers from? Your grandma, mama, right? Those numbers don't work. Those numbers work back then because inflation didn't move because there was no internet. With internet driving sales, it would be hard for that to happen. All right, guys. So that's what I feel is going to happen in 2021. With the increase of the conventional loan limits, it's a sign to me, I don't see a crash. I might see it might flatten out a little, but it doesn't look like it's going to flatten out in the LA, Orange County, and San Diego because they increase such big margins. They're expecting people to buy. It's incentivizing them to buy without going 20% down. All right. Let's go some Q&A here. For those of you who have questions, I have answers. What's going on? Kitty, what's going on? New FHA loan limits in a couple weeks or January. Whenever Kitty Cake, they're already out, but they're not giving a dollar amount. It's a percentage, but it's kind of weird. So as soon as they come out, Kitty Cake, I will put them up. Jesse Ochoa, is a good idea to buy now or should I wait? If you are thinking long-term and you're not flipping, buy now. If you are flipping property, you might want to wait it out. But if you're not flipping, buy now. Why? What bounces down will come up. I don't see the market right now. If the market dipped 5%, 10%, there's enough investors out there who will pick up the property. I'm telling you guys this right now. Mark my words. If you're a normal consumer, you will not have a chance to buy a foreclosed property. Mark my words. If someone misses a single payment, right? These big data companies, they're selling the data already to investors. If they miss 3 mortgage payments, right? The lender will publish their notification of default in the newspaper. There are investors looking on newspapers every day. Trust me, if the person can't make the mortgage payment, an investor will come knock on your door before you even need to call a realtor to sell your house. And that investor will see how much equity you have and will offer money to buy you out of the house and buy the home. Mark my words. If this time if a home starts missing mortgage payments, you as a normal consumer will not have a chance to pick it up. The investors, hedge funds, banks, they learned from the crash of 07, 08. They're not going to even use majority of the asset management companies. What these asset management companies did, they managed portfolios for these banks, right? And these banks paid off tons of money and took it as losses, right, to get rid of these properties, right? Now, these hedge funds, these banks, as soon as people become late, they call up these hedge funds, I got a house, they can't make their payment, right? If it even gets there. If not, investor already calls them. So I'm telling you guys that until you guys understand. So Jesse, if you're buying long-term, buy right now. Sorry about that tangent, guys. Hopefully, I have conviction about it, so I just want to share that with you guys. Alex Villanueva, hi, thanks for doing this. Is it possible to buy a house over the Riverside loan limit with 5% down? Well, there is the new loan limit. If you go over the new loan limit, you would have to come in with a bigger down payment, right? You would have to come in with the 5% down in addition to whatever's above the loan limit. Hopefully that helps you out there, Alex Villanueva. Virgilio Rojas. Can someone with a TIN number apply? So if you have an ITIN number, right, identification number, you can purchase a home. You probably can't go with a traditional mortgage. You're going to get something called a non-QM loan. There is a bank, if you are in California, in the city of Pomona. It's called the Self-Help Credit Union, right? This Self-Help Credit Union, I don't get paid by them. They don't sponsor me, but I send everyone with an ITIN number to them. I wouldn't go anywhere else for an ITIN number except for Self-Help Credit Union in Pomona. Their bread and butter is ITIN number. It's going to be at least 10% down, no PMI. It's a great program at Self-Help Credit Union. All right, so definitely check that out. If buying multifamily, how can you use income from that property for a loan? If you are buying multifamily, 2 units, 3 units, or 4 units, okay, you can use 75% of the rental income up to the mortgage payment. For example, if you collect $4,000 in rent, you can use up to $3,000 max. If the mortgage payment is $2,500, you can only use up to $2,500. You can't add that extra $500 as income. If you've been a landlord for 2 years, right? If the property rents for $4,000, you can use the full $3,000. Doesn't matter what the mortgage payment is. All right, hopefully that helps you out there. Laura Sanchez asked a great question. If you are a first-time homebuyer cosigner, can you be a first-time homebuyer again as the main buyer? Laura Sanchez, the answer is yes. As long as the other person on the mortgage makes 12 months payments. As long as they made 12 months payments and you do not live in that home, you can go out and buy a home and be a first-time home buyer. Hopefully that helps you out there, Laura. Irana Castillo, how you doing? What's the difference between a jumbo loan and a conventional loan? A jumbo loan is typically a loan that's above the county loan limits, right? Which we flashed, right? That's a jumbo loan. Typically, if the loan is above the loan limits, right now, because of COVID, you have to buy with 20% down, right? So after your down payment, if the loan limit is above the conforming loan limits, right, then that would be considered jumbo. Back before COVID, there was 10% down. Now there's only 20% down. That's why with an increase in loan limit, it's going to help people who are in the higher loan limits still buy with 5% down instead of putting 20% down. That's going to increase more buyers out there. All right? Hopefully that helps you out. Jasmine, 725. If it goes up to 740, will that make my rate better? Yes. So for conventional, 760, you're the kingpin. 740, 760, you're solid. 720, 740, you're decent. 720, 700, you're on conventional. If you go under 700, you won't like the payment. I promise you. Okay? Guys, that is it for us tonight. The 56 people on Facebook, thank you. The 26 people on YouTube, thank you. If you're not following me on Facebook and you're not following me on Instagram, YouTube right now, please do me a favor. Hit the subscribe or the notification button. You're notified every time we go live. All right? We want to end all our episodes with our attitude is gratitude. Without you, WAM fam, there would be no us. So thank you so much from the bottom of our hearts, right?